I'm Senior Vice President here at URL Insurance Group, and we're very happy to have everyone with us today. For those of you doing business with us for the first time, we welcome you to join us. URL is a full-service marketing company that offers a full line of annuities, both fixed and indexed, single premium life, traditional life products, and we have a group department as well as individual health and senior products such as MedSup and MedAdvantage. For those of you who have been doing business with URL, we definitely thank you for your support and for your business. We know you have a lot of choices of where you put your business, and we are very grateful that you do business with URL Insurance Group. For everybody, if you haven't checked out our website, we feel we have one of the best websites, cutting edge out there, and our website address is www.urlinsgroup.com. So please feel free to check us out at your convenience. Okay, I'm very excited today. We have a great program for you. As Senior Vice President, I oversee the annuity and single premium life division here at URL. And frankly, the last few years, the fixed annuity business, especially index business, has been booming. People are finally realizing the benefit of the upside potential with no downside risk. And income riders have also been fueling annuity sales for the last 2 to 3 years. With that being said, the truth is, though, that sometimes what I call sideline money, whether it's people's savings accounts, CDs, or other funds not needed for everyday living, can be better utilized in a life product. And those life products now have riders for living benefits, and these benefits may better suit your client's needs, especially as they reach 60-year bracket, 70-year-old, and so forth. So as their needs change, the products change, and we're seeing a lot of annuity sales, or what would have been annuity sales, go into the single premium life product. Today we're very happy to have Mr. Gary Voigt with us today. Gary is the Vice President of Corporate Marketing at Baltimore Life. And Baltimore Life has two such products, as I mentioned, the single premium life. One can be used for qualified funds and for annuity transfers, and the other one can be used for non-qualified money, such as, like I said, CDs, money markets, and that kind of thing. So we're very happy to have Gary here. He's an expert in the single premium life field, and he's going to take some time today to review these products and discuss how they can benefit you and your clients. Now, on the panel on your box, you should see an area that has questions. So if you have any questions, you can type them in, and what we'll do is we will get to all the questions at the end of the broadcast so that everybody can walk away knowing that their question will be answered. And of course, you can also call us here at URL. Our number is 800-926-8875. So without any further ado, I'd like to turn the program over to Mr. Gary Voigt.
Good morning, everyone. My name is Gary Voigt. I'm Vice President of Corporate Marketing here at Baltimore Life. I want to thank you for investing some of your very valuable time today to learn more about Baltimore Life's tax-efficient asset transfer program. We're going to be talking about two products today, and that's our Generation Legacy and Single Premium Whole Life products. Both products are really designed, as Joe said, with your senior clients in mind, who have what we like to call some sideline money or leave behind money, money they don't need to live on, but they simply want to leave it behind and create a legacy. These products can accommodate either after-tax cash funds or qualified funds. We'll talk about how you use each product for different types of funds. A little bit of information about the market before we get started. It's absolutely huge. About $1 to $3 trillion in wealth is being transferred each and every year, and that's expected to happen between now and the year 2052. We know about 55% of your clients' wealth is moving on to their family members, and about 16% of that wealth is moving on to their favorite charities. So yes, about 71% of that wealth is moving on to people and organizations your client knows and loves. The question is, are they maximizing the amount of money they can pass along, and are they doing it in the most tax-efficient way? Well, the first product we'll talk about is Generation Legacy, and this is the product that is designed to take single premium dollars from non-qualified deferred annuities and other qualified funds that's not needed for daily living. So whether it be the annuities you're out there selling, or if it's 401ks, IRAs, 403bs, and the like, those are all inbounds as funding vehicles for Generation Legacy. Obviously, it's creating a legacy for your clients' heirs and favorite charities, and it does immediately increase their estate through the use of a single premium product. The issue ages for the product are 60 through age 80, and our product very uniquely, with a single application you're going to write, combines the issuing of a single premium immediate annuity that will essentially be the receiver of those transfer of funds, along with a limited premium payment whole life product. Once issued, both products will be seamlessly administered together by Baltimore Life for your client's behalf in order to provide all the benefits we'll be talking about today. The product offers simplified underwriting through 4 tables, and as well as offering on an automatic basis the accelerated death benefit rider in all states where it's approved, and we'll talk about that in a moment. We know this market for qualified funds is also extremely large. About $2.3 trillion of in-force deferred annuities are out there right now. About 60% of that money are in tax-qualified plans, but about 40% of the funds are in those non-qualified deferred annuities that you're probably selling. As you probably well know, a significant share of those annuities won't be annuitized. They'll simply be transferred to the next generation. So, the question really becomes, is the annuity the best product to die with if the only goal was to pass that money along? We do know that if your client has qualified funds and they're not going to distribute or need the income, that there is going to be an RMD that kicks in at 70.5. And of course, if the client dies, they're simply going to be passing that taxation along to family members. So, again, is the annuity product the best vehicle to use if the client's trying to transfer wealth versus trying to accumulate wealth and generate an income? So let's talk about using it as a way to pass or transfer wealth to the next generation. So think of any single premium product as a gift your client's going to be conceptually passing along to the next generation. And inside that gift box, you're going to be helping the client facilitate the transfer of funds into the gift. Inside that gift box, with a single application, we're going to issue 2 products, a SPIA as well as a limited premium payment whole life product. Now, over a period of either 7 or 10 years, depending on the issue age of the client, we're going to make annual premium payments from the SPIA to pay premiums on the life insurance. So what dictates the payment pattern? It's the issue age. The client 60 to 74 at issue will issue a 10-year SPIA along with the 10-year life product. If the client's 75 to 80, a 7-year SPIA along with a 7-year life product. Now, here's a great feature of this product. What if the client were to die during the period of time while the annuity, the SPIA, is being used to fund or pay premiums for the life insurance? Well, we know that the life insurance product will always pay out an income tax-free death benefit, and that will, of course, be much greater than the single premium paid. But with the Generation Legacy product, the client's beneficiary would also receive the remaining payments from the SPIA not used to fund the life insurance. So if they were to die, let's say in year 2 of a 10-year plan, 8 more years of payments, or the commuted lump sum of that value, would be paid to the beneficiary in addition to the life insurance benefit. So they're getting both. We'll talk a little bit about the tax on the remaining payments from the SPIA, but of course the life insurance is always income tax free. At the end of the 7 or 10-year period, that gift box is complete. The life insurance, of course, is fully paid up. The SPIA goes away. It's done its job. It continues to provide cash value growth on a tax-deferred basis, continues to offer an income tax-free death benefit, and yes, continues to offer the accelerated death benefit rider we'll be talking about. So just to recap, the issue ages are 60 through 80. We base our pricing on current age or age at last birthday. Now, the reason that's important is because with this product, you're going to be transferring funds from other products and institutions. That transfer process may take 20 to 35 days. So we're going to issue the policy based on the client's age, the day we receive the funds. Now, the minimum premium to get this started is only $5,000, even though the average premium is about $60,000 to $65,000. How many clients do you have out there that have small annuities that they're just rolling over, for another period, or maybe they've gotten to a point where they can no longer roll that money over for another period? And if you ask them the simple question, what is your goal with the money, they're going to tell you, I'm just trying to pass it along to the next generation. Couldn't you offer the client a much greater benefit to reach that goal using a generation legacy type of solution? Now, the maximum face amount that we'll issue for the whole life product based on that single premium is $450,000. We have two underwriting classes for generation legacy. We have non-tobacco and tobacco, and we will issue as standard any risk standard through Table 4. That's through a simplified underwriting process that I'll talk about a little bit later on. Now, cash values, they accumulate in the life insurance product on a non-participating basis. Partial surrenders, they're permitted from the life insurance policy's cash value, and they're permitted, though, after the life product becomes fully paid up, 7 or 10 years. Loans, they're available at any time from the life insurance cash value at a maximum interest rate of 8%. So now let's talk a little bit about that accelerated death benefit rider, because it truly can provide cash at a time when the client's needing that money most, essentially providing a living benefit. Now, I want to provide the disclaimer to say that this in no way, shape, or form is long-term care insurance. This, in fact, is an accelerated death benefit rider that accelerates the face amount of a life insurance product in certain situations. Your client's best solution to a long-term care need, if they can afford it, is a long-term care policy. But as we know, many seniors can't afford long-term care insurance, so isn't it nice to know they can access their death benefits in certain situations? We have 3 health event triggers that will allow your client to accelerate those benefits of the face amount of the life product. They are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. This truly can increase the liquidity of the life insurance product, and upon that decision to accelerate, which can happen anytime after issue, a lien for the amount of money taken will accumulate at a maximum interest rate of 8%. Now, the maximum that someone can accelerate from the face amount is $250,000, but the good news is we pay out this benefit once, and we pay it out in a lump sum, so that way your client has the cash at a time when they need it most. And keep in mind, these are unrestricted funds, so they can use those funds in whatever way they see fit. So now let's talk a little bit about the definitions of the triggers and the percentages of payout. First one is terminal illness. Client in this case would have to be considered by their doctor as terminally ill with a life expectancy of 12 months or less. Here they could accelerate up to 75% of the face. For qualified nursing and extended care situations, the maximum acceleration rate is 50%. So to qualify under the nursing home provision, client needs to be chronically ill, confined to a nursing home continuously for 90 days, but with the expectation of a permanent confinement. For extended care, they need to be chronically ill, have been so for 90 days again, but now require care provided by a licensed home health care agency or a licensed or state-certified adult daycare. Here again, they could accelerate at 50%. Now, please note, as you'll see in the footnotes, because I know a lot of you might be in the state of Pennsylvania, that there is a different percentage available for Pennsylvania and Indiana. For Pennsylvania, it's at 65% for terminal illness and 40% for qualified nursing and extended care situations. What is the definition of chronically ill? Well, if the client satisfies either of these definitions, we consider them to be chronically ill. The first one is they can't perform 2 out of 6 activities of daily living. But maybe they're okay on their ADLs, but possibly could be suffering from, let's say, a severe organic mental illness, such as Alzheimer's or dementia. In either case, we would consider them to be chronically ill. So let's take a look at some examples of how this accelerated benefit might work. This is a first scenario of the client who's terminal. They have a $100,000 face amount on the life contract, and they decide to maximize their accelerated benefit at 75%. So they can pick up a check for $75,000. Now, the lien would be established by taking the money we accelerated, $75,000, plus a $100 service fee. So it's $75,100 is the initial lien. Now, if the client were to die immediately after taking that money, no time for interest to accrue on the lien, the remaining death benefit is simply the face amount less the lien, giving you a remaining death benefit of $24,900. But the more likely scenario is this one, and that is where the client dies 1 year after getting their $75,000. Now the remaining death benefit 1 year later is $18,892, which is the face amount less the original lien plus 1 year's worth of interest, and we're just assuming the max rate of 8%. So in this situation, the client would have to live over 4 years for the interest to outrun the remaining death benefit. And we're assuming here, again, the client is terminal. So that is very, very unlikely scenario to happen. So when could these riders potentially terminate, the accelerated death benefit riders? Well, the first scenario is an odd one, but it can happen. What if the whole life policy ends? Here's a situation that could happen. Let's say you had $100,000 put into this in year one of a 10-year plan, and the client's giving you $100,000 of sideline money, right? But 2 years later, they come to you and say, you know what? I thought it was going to be sideline money, but now I need the income. So 2 years into this, they would need to cash out on the life product, and there would be very little cash value there. But 8 more years of payment from that SPIA would be made directly to the annuitant to help support their income needs. So if you do that, of course, you're ending the life contract, and also you're ending the accelerated death benefit rider. Obviously, if the insured dies, we pay a death benefit instead. And the other scenario is, what if the client accelerates under one of the other riders? So let's say they accelerate under the nursing home provision of 50%. You can only accelerate once. You can't come back and accelerate a second time. Now, here's that unlikely scenario in the next bullet, and that is where what if the lien and the interest exceed the remaining death benefit? That's where that client who's terminal lives 4+ years. In that very, very unlikely scenario, the owner may repay all or part of the lien at any time if they want to keep this qualified as a life insurance contract. Keep in mind, though, even though you accelerate the benefits, there's still cash value in the life product that accumulates on a tax-deferred basis. And by the way, if you have a lien through the rider, you cannot also have a loan. You can't have two things going on at once. The last thing is that no matter whether you're working with our company's rider or any company's similar rider, you always want to make sure you tell your client to consult with their tax advisor, because technically these benefits may, keyword is may, in certain situations be considered taxable as a living benefit. So here's a quick example of how this rider could work. Here's the female 70 who has $50,000 in premium. We would issue on the life product a face amount of $78,000, nearly $451. But look at those payouts in a living benefit situation. That is real cash to your senior clients at end of life, knowing that they could get access to that cash as a living benefit and still in most every case have remaining death benefit. So we know the key tax efficiency of this program is life insurance is the fact that you're paying a single premium, getting a much greater death benefit, and the death benefit is paid out income tax free. But what about the transfer of qualified funds into the SPIA? We think this is also a very efficient part of the program. No matter whether you're rolling money from an IRA that's never been taxed before, or you're rolling money from a non-qualified deferred annuity that has a cost basis and a taxable portion, eventually Uncle Sam has to get paid, right? So if you roll the money from any one of these vehicles, let's say an IRA, into the Generation Legacy product, it goes into a SPIA, and the SPIA becomes a qualified funding vehicle for the life product. And because it's funding life insurance over 10 or 7 years, we're able to help your client spread that tax out over the same 10 or 7 year period. So the policy owner will get a 1099 each year during that payment period of 10 or 7 years that they would have to declare as income. Keep in mind that the SPIA payments that we make each year to the life product do satisfy the RMD rules. That's a good thing. And finally, at death, we know that the life insurance is always paid income tax free, but the remaining payments from the SPIA any portion of which has never been taxed before, of course, would need to be declared as income, and we would send a 1099 based on that distribution. So the default method that we pay out remaining payments from the SPIA are annually, just like we would have paid those payments to the life product. So if there's 8 more years left, the Benny gets 8 more years of payments. But the Benny could say to us, I want a lesser commuted lump sum of those 8 years of payment, and in fact, we would do that for them. But keep in mind, they would get a 1099 based on the distribution they elected for the taxable portion. One more thing on tax, and that has to do with the application. Because we're dealing with qualified funds, we always have to ask the question, does the client want us to withhold tax on the money that's being rolled over? We have to ask the question, but the way we've designed this product is that we cannot issue the product if we have to withhold tax. So please make sure you check the box on the app that says that you do not want tax withheld from the annuity that you're rolling over. Otherwise, we have to send everything back to you. So here is some quick ideas on potential scenarios. This is at 65, non-tobacco user with $50,000 in premium. Now, because this client is 65, we're going to issue a 10-year SPIA along with the 10-year life product. For the male, the face amount would be $77,361 and change, and for the female, the face amount would be $87,031 and change. So what did you just do for this female 65? With 50 grand of leave behind money in an annuity, as an example, you would have increased her estate value by over $37,000 just from the life insurance. Keeping in mind that if she dies during the first 10 years, the remaining payments from the SPIA would also be paid. Now, if that client says to you, well, Joe, what if I kept the money in the annuity? I'm in a 25% tax bracket, I'm making 3% on the money. It would take her over 19 years just to accumulate the $87,000+ that's paid out as a death benefit from the life insurance. And by the way, if that was in a taxable investment, it would take her over 25 years to do the same thing. Keep in mind that when you have that life insurance payout, that $87,000+ is always going to be paid income tax-free to the beneficiary. Now here's the 75-year-old, a little older, a little shorter life expectancy, but the numbers still look good, don't they? Because they're a client of 75 now, we're going to issue a 7-year SPIA along with a 7-year life product. For the male, the face amount would be $61,516 and change, and for the female, the face is $67,000, nearly $9. So you've taken a 75-year-old who had sideline money, and that lady, you've increased her estate by over $17,000. And for the man, you've increased his estate by nearly $12,000. Knowing that if they die in the first 7 years, the remaining payments from the SPIA would also be paid. I can tell you this from being involved with a lot of these cases, is that this is an eye-opener to seniors. When you're able to come to them and find out what their goals are with their money, and they're looking to pass that money along and show them these options, it's going to excite them, it's going to make a sales opportunity for you, but more importantly, it's going to create tremendous opportunity for referrals. Seniors talk when they're meeting at the Bob Evans for breakfast every morning, and it's going to create great referral opportunities for you. So this is a ledger showing you how this product might work. We have on our agent website something called Secure Solution Illustrator. It's our proposal software. Now, these are non-illustrated products. No signed illustrations are needed, but I think you'll find the proposal software can be very beneficial. We also have a mobile tool that you can use. It's called Mobile Link, MOBILE .vaultlife.com. If you go to MOBILE vaultlife.com, it will in fact get you to Mobile Link. I'll show you that address a little bit later, but Mobile Link is like having an agent guide in the palm of your hand. It not only gives you the product information and underwriting guidelines, but it will give you all the ledgers and calculation tools you need right there on your phone or smart tablet, as opposed to relying on a proposal system. So here's an example. That 70-year-old. It's got $50,000 from an annuity with a cost basis of $40,000. You see there in column 3, there are $50,000 going into the SPIA, and out of that SPIA each year, we'll make an annual payment to the life product of $5,570. Out of that premium, nearly $4,000 of it is excluded from tax, and in the estimated taxable income would be about $1,571. Of course, the ledger goes on to show the death benefit as well as the commuted lump sum of the SPIA at death. So the nice thing about these ledgers, it gives you a good ebb and flow of the scenario to paint through and personalize with your client. And you'd be surprised how good this looks on a phone. In a landscape mode, it looks fantastic. So I've sold cases using strictly Mobile Link as a tool to sell it, to show the proposals. The other thing that we have, and you're going to need, of course, when you're writing this business, is an application in your forms. So we're going to make this simple. If you go out to Baltimore Life's agent website, you're going to find that every product you're personally contracted for will have a corresponding product toolkit on the home page of the agent site. So if you went into Generation Legacy, you're going to find a bunch of great sales and marketing tools out there to help you. But one of the things in the toolkit is something called a printable application and forms package. You answer a couple of quick questions, and it will automatically populate for you all the forms that you're going to need to do business with us. The other thing that it's going to print out is a set of instructions that will basically guide you through how to get the apps to us, and more importantly, how to complete our point of sale underwriting interview. That's right, as soon as you complete the app, you'll complete a short 12-minute underwriting interview at point of sale with your client and our tele-interviewers. And over 90% of the time, we're going to give you an underwriting decision right then and there. You don't have to wait for it. You're going to get it right away. So that's a huge, huge plus in making this a very comprehensive program for you. All the instructions for doing the call, the phone numbers, the time to call will be in your app package. By the way, when you get to these forms on our site, you can either print the forms or order forms from us, whatever you might want to do. Out there in our toolkits, you're going to find a bunch of other great sales and marketing tools. I'm going to try to have the time to get into a few of these today, but I think you'll like all the tools that we have out there for you to work with and to market with. So let's talk about the second product, and that's our single premium whole life product. This is the sister product that really is designed with similar goals for your client in mind. The client wants to create a legacy, increase their estate value through the use of a life insurance product. One of the key differences is that this product will take single premium funds from after-tax cash vehicles, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. Another big difference is the issue ages. Because we're working with after-tax cash funds, the issue ages are 50 through age 85, little broader issue ages to work with. With this product, we also have simplified underwriting through 8 tables of underwriting. We'll talk about that, as well as our accelerated death benefit rider, which provides the same 3 health event triggers you had with Generation Legacy, but this product has a little bit more of a lucrative and flexible payout. We'll talk about it. So 50 to 85, again, based on current age or age at last birthday, 2 tiers of underwriting. So you can either get non-tobacco or tobacco, standard through table 4 types of risk in level 1, same that you had for Generation Legacy, or we have that second level, which is tables 5 through table 8. So a client with even more health conditions can get issued. Let's say that client who is an insulin-dependent diabetic would be potentially a candidate that you issue with this product. Minimum premium to get started is only $5,000. How many clients do you know that have CDs out there and multiple CDs? Here's $5,000 or $10,000 or $20,000 for junior to go to college. Here's money for my kids to help them get started. Whatever it might be, they've got pockets of money that's compartmentalized with a purpose, that when you start asking them what that purpose is, you're going to find ways to help them increase their estate value. What about those seniors who have money set aside strictly for burial reasons? They might say to you, if you're trying to sell them life insurance, I don't need life insurance, I have a burial account set up. And that means one of 2 things. It either is a prearrangement at the local funeral home, or they know they've got a $15,000 CD set up at the local bank that their kids know that's the money set aside to bury them. Well, here's how that scenario might go. Mrs. Jones, you're 70. You're going to live many more years and costs are going to go up. What if I was able to show you a way to take that $15,000 you have in the CD and provide nearly a $25,000 income tax-free death benefit for your family? Oh, by the way, if you became terminal in a nursing home, extended care situation, you could access some of that cash to help you with your end-of-life expenses and still have life insurance. Would that be of interest to you? So that's called the burial account concept, and I can't tell you how many agents have got started selling single premium business using this simple idea. Once they start selling the smaller premiums, they start figuring out that selling asset transfer business is all about good fact finding. So finding the money is critically important. The maximum face amount for single premium whole life is expressed in terms of the maximum net amount at risk, and that's simply the difference between the face amount and the premium paid, and these are the levels for that maximum net amount at risk. All of our calculation tools, proposal systems won't let you violate those limits, so you don't have to worry about remembering them. Cash values, they accumulate in the product on a non-participating basis, but here's another key difference. Partial surrender capabilities starting in the second policy year. So even though the money was leave behind money, Mrs. Jones thinking, by the way, Joe, what if, God forbid, the sky falls and I need money? Can I get access to my cash? Well, starting in policy year 2, 10% of the available cash value can be taken as a partial withdrawal. 20% in year 3, 30% in year 4, year 5 it's 40%, but from year 6 forward, it's 100% of the available cash value can be taken as a partial withdrawal. Loans are available. Really don't know why you would take a loan when you have such lucrative partial withdrawal capabilities. Now there's 3 health event triggers again. This is under the accelerated death benefit rider to get that benefit accelerated on the face amount of the life product. The same 3 health event triggers you had for Generation Legacy, identical. Same way, we will pay out the money once in a lump sum, and these are unrestricted funds. Big difference. With this rider, you can decide, you know what, I don't need life insurance. Give me the maximum amount of face amount as a living benefit today, and I'm done with the contract. That's one way to do it. Or you could say, you know what, I want a partial amount of the benefit to be accelerated and keep a certain amount of life insurance. That's called a partial acceleration. We'll talk about it. That is available. So let's use the examples. Terminal illness. It's the same definition to qualify, but here the client could say, don't need life insurance, give me it as much as I can get in cash. Now they could take up to 95% of the face amount, less a $250 admin charge. Or they could say, let's keep a certain amount of life insurance and accelerate the balance at 95%. Qualified nursing home confinement, same definition of qualify, but now because they're going to live longer, the maximum acceleration is 90%, less the admin charge. And for extended care, they're going to live longer yet, so the maximum acceleration rate is 80%, less the admin charge. In all these scenarios, don't forget, you could say, let's keep it a pocket of life insurance, a certain amount of it here, and accelerate the balance of the face amount at these percentages. Same definition for chronically ill, 2 out of 6 activities of daily living, or a client suffering from a severe organic mental illness. So here are the examples of premiums to death benefits. Look at these. And I know some of you might not be looking at it, so I'll verbally try to describe it as well. But this is the 65-year-old who has $50,000 in premium. For the male at level 1 underwriting, standards through table 4, we're going to issue a face amount of nearly $82,000. And for the female, the face amount will be nearly $93,000. But with this product, let's not forget, you have that second level of underwriting, tables 5 through 8. So the face amount that you'll see reduction in face amount from level 2 to from level 1 as a comparison is about $5,000 to $6,000 less. It's not that big of a reduction, and this standard is true across all ages and genders. So to get a second tier of underwriting and only lose $5,000 to $6,000 in face is a pretty good deal. So what did you just do for this female 65 who had a CD that they're just trying to leave behind for their family? You've increased her estate by nearly $43,000. And by the way, if the client's thinking, let's keep the money in this taxable investment, at 3% interest, it would take her over 28 years just to accumulate the nearly $43,000 you increased her estate by. All right, so it really is a tremendous opportunity for them to pass along wealth in a much greater way and do much better than they were doing in their taxable investment. Here's the 70-year-old, little older, shorter life expectancy, but the numbers still look good, don't they? At level 1 underwriting, $50,000 in premium. The male would get a face amount of nearly $74,000, and the female's getting a face amount of just over $82,000. Not forgetting that that level 2 of underwriting is available at about a $5,000 to $6,000 face amount reduction. So again, these are big eye openers to take a 70-year-old and give her what, over a $32,000 increase in her estate from a CD that she was just going to leave behind anyway. This is really going to generate not only a sale for you, but lots of referrals. Same story on forms. Go to our product toolkits for single premium whole life, answer a few questions, get your forms, and again, we have the same point of sale underwriting process available for that product. So the point of sale underwriting, this is a big deal. This is really making, it's the icing on the cake, so to speak. So once you've completed that call, complete the 12-minute interview, and basically what's happening is that our call center, the teleagents, are actually asking your client the same health questions that you completed on the paper app. The only difference is they're firing off in the background the data they need from the MIB as well as the prescription drug database check. That way, if they see any differences in that data as compared to how the client answered the app, they're going to attempt to get some clarification and determine what the issue is so they can make a real-time decision. And we can do that over 90% of the time. Once the decision has been made, any underwriting decision is going to be given to you, not your client. You're going to be the one communicating that underwriting decision to your client. We'll also give you a confirmation number that we'll ask you to write on the front page of the application you're going to submit to us. So what are the hours to the call center? And again, all this is in your app package, but the phone number is 888-368-9678. The hours are 9 a.m. to 10:30 p.m., Monday through Thursday, as well as 9 a.m. to 6 p.m. on Friday. And these are Eastern times. We do support English and Spanish languages routinely. Other languages are available upon request. If you have a hearing impaired client, we have TTY services in both English and Spanish. Please keep in mind, though, that this interview must be completed within 5 days of completing the application. Now, you might be thinking to yourself, hey, what if I write business on a Saturday, or I'm out on the West Coast and the hours are different than mine and the call center's closed? What do I do? Well, it really doesn't matter when you write the app. You always want to end the appointment by calling the call center. When you get the voice prompt, leave your name and number, the client's name and number, and a date and time you want us to call your client. The call center will outbound your client, do the interview, and again, call you back with the underwriting decision that you'll communicate with your client. If you're calling during normal hours, we'll get the decision done, all as part of the same call. So what about pre-qualifying the application? We have an app for each product, and the reason we do is that with Generation Legacy, we have one tier of underwriting. So as a result, we have a Part A section, just one section of medical questions. If you get a yes in Part A, it just simply means your client does not qualify through 4 tables of underwriting. But if you're all no in Part A, good drug history, good MIB, good height and weight, we're going to issue Generation Legacy. For single premium whole life, we have 2 tiers of underwriting. So as a result, we have a Part A and Part B. Still think of your Part A as knockouts. If you get a yes in Part A, it means that your client does not qualify through 8 tables of underwriting. But all no in Part A and Part B, with everything else looking good, is going to get you standards through Table 4 or Tier 1 underwriting. And all no in Part A with 1 yes in Part B, with everything else still looking good, is going to get you Tier 2. That's Table 5 through Table 8. So that's essentially the pre-qualification of the application. What I'm going to do now, in the time we have remaining, Joe, is I'm going to go ahead and switch over and do a little bit on some marketing support. And I'm going quickly because I'm very sensitive to the time you committed to this call today, and I apologize that we had this delay. So what about marketing support? Well, your first line of marketing support is URL. I mean, they've got folks inside that know this product inside and out, know how to help you market it in the situations you're in. Please contact URL, first line of defense for marketing support. But you're going to find, I talked about the product toolkits, right? And out on our agent website, you'll find those product toolkits. And up at the top, this is the home page of the agent site. And you see all those colored blocks? Those are the product toolkits. And when you click on one, like Generation Legacy, it takes you out to something that looks like this. So everything you need to sell and market is out there for you, including on-demand training. So I'm going to help you look at a couple of these things right now. This is probably the most important one. That's our mobile link software. Copy this address down, mobile.baltlife.com. That will take you to that center panel, that white panel on the screen, and that's our mobile link page. If you're on a smartphone, most smartphones, while you're on that page, you can hit the settings button, and you can save that page as a link directly to the face of your phone. Then it'll, you can use it just like any other app on your phone. But Mobile Link provides you with an agent guide electronically in the palm of your hand. You not only have the product and underwriting information, but you also have a rate and values calculator. I think you'll be very, very pleased at how easy this is to use. And again, you can use this for both of the products we talked about here today, as well as our final expense product. What about a great point-of-sale presentation tool? If you want to be able to tell the conceptual story of these products, you can use our Secure Solution Presenter software that you can download, again, right from the product toolkit. Once you download it, you can view a presentation at point of sale with your client. You can print it, use a hard copy, or email it. But here's a graphic example of how these presentations look. Very graphically appealing, explains the concept of asset transfer, provide key questions to dialogue with your client about, reviewing features and benefits, and so forth. So that's all, again, in our Secure Solution Presenter software. That's just a kind of a piece of what you'll see when you use it. Another tool in the toolkit is called our Asset Transfer Analysis Form. We talked about the importance of doing good fact finding, and the Asset Transfer Analysis Form can help you do that. With this form, you can collect the client's current assets there in the center and show them right there, if you transferred a portion of these funds, the impact that'll make on your estate value. The bottom of the form allows you to collect the client's current income, so you ensure they have adequate income. And then the top of the form gives you those key questions, again, to be asking, one of which is, Mrs. Jones, do you have money that you'd like to leave behind for your family or favorite charities that's not needed for daily living? And most people get the leave behind money concept, and if they don't, it's going to create a great conversation. This slide is a summary of some of the sales ideas that we have out on a document called Single Premium Sales Ideas. And I'm not going to have time right now to review all these, but I think what you're going to find is that it's going to help you think immediately of people to start going out and see, to talk to about these concepts. Make sure you have a blank sheet of paper alongside of you when you read the full explanation of each of these sales ideas, because it's going to give you a great prospect list to start with. We also have customizable marketing flyers out there where it explains the concept of asset transfer, features and benefits of the solution, and then you can personalize the form with your contact information. Save it, print them, whatever you might want to do. We have print ads out there for you to use. We have letters. We have phone approaches. We have third-party articles, and we just recently added a white paper that I think you'll like as well. So all this can be found out on our agent website inside of our product toolkits. So Joe, one more plug I want to make before I finish, and that is for our agent trip. I think Baltimore Life, just like URL, has great trips for our top producers. And the great thing, if you qualify for URL's trips, you're probably going to be qualifying for ours as well. Next year, we're going to be taking you and a guest, all expenses paid, May 19th through the 23rd to Punta Cana at the Hard Rock Hotel and Casino. The great thing about our trips is that they're all pleasure, no business. We don't have meetings. It's all about having fun with your guests, as well as getting to network with all the top producers that are there. So make sure you take a look at the qualifications. By the way, it's only $60,000 of production credits to qualify. And if you're writing single premium business, we count 10% of the premium towards the trip. So if you do $600,000 in premium, it'll give you $60,000 in credits. So with that, Joe, I'm going to pass it back to you. And hopefully we made up some of that time here today to get everyone on their way at noon.
Yep, we did make up the time, Gary, and thank you. Great presentation, good products. We did have a question about the availability of the products in Florida. I believe
it is available.
Yep. Yep. We do a lot of business in Florida with these products. They are very good down there, and most of the other carriers we represent do not have products in Florida, so it's a great place to do the Baltimore Life business. I don't have any other questions on here today, so with that we'll wrap up. Again, thank you for taking the time to be on our call today. Feel free to call us here at URL. My name is Joe Corio. You can ask for Maria Adams or for Jason Collins. Our toll-free number is 800-926-8875. And I'd like to thank everybody again for their business. We look forward to working with you more with Baltimore Life, and have a great day, everyone. Thank you.